on that front. Right. All right, I am just getting us live on YouTube right now. Okay, we are. We are live on YouTube, and welcome to everybody out there in internet and trading world. I am joined today by Mr. Lloyd Ping because we don't have. Is that how you pronounce your surname, mate?
You got it slightly off. Peng, P-N-G.
Peng, sorry, yeah. Lloyd Peng. Jeff is, actually, I'm not quite sure. I can't remember where Jeff is. He told me he's not around. Might be an anniversary or something like that. So we have Lloyd in with us today, kind of a special guest, if you like. Now, let's have a quick check. Welcome to you, Lloyd, as well. And we will discuss any ideas that you have out there with the markets. We are going to discuss the FTSE 100. I tell you, mate, I am in a bit of a hole, I have to say, with the FTSE right now. But I'm sticking with my longs. I don't really have a long bias, so I still think the short bias has to be in play. But it's a fantastic place to try and pick this up. So I have picked up another long down here. There is a target of probably, I mean, if I can get 100 pips out of this, then I'm in pretty good shape. So that's probably a bit of a target there, which is around about 80 pips away. I suspect that the market will continue to struggle down here. We don't. I heard a little health report last night from the United States, and they're basically saying expect a pandemic, expect things to be closed. I don't know how are things that are currently in Singapore. Are they shutting down at all, or you know, is it still fairly quiet over there in the way of Corona?
I think we are fairly. I think most of us have already gotten used to the situation.
Okay.
There really isn't any sense of urgency on our side. Most of us are just getting along. Yeah. So whatever directive the government has given, we just okay, let's just get along.
Okay, so this is the question really. When it comes down to it, you know, do you believe that the reaction that we've had, and I tell you, there's a really interesting chart for me. This is the reaction in the FTSE 100. Maybe it doesn't look that drastic when we look at it on an hourly chart, but let's look at it on some other charts. Let's look at it on a daily. Look at that. Gap, poof, poof, straight down. We've got the S&P, same situation, gap, straight down, and you know, taking out a significant level down here, not even able to bounce first, really. There's the Dow Jones Industrials. Huge move to the downside. We got the Nasdaq in a similar situation. The interesting chart to me though is gold. You know, as we saw the market continue to come to the downside, we also had a down day yesterday in gold. I mean, it didn't turn into an evening star. You know, just about managed to kind of hold off from turning into an evening star, which would have required this particular candle to close 2/3 of the body of this candle. So closing down at the lows would have given us an evening star and a pretty negative looking pattern there. But this is a little bit confusing still, you know, slightly shading on the negative side. But I thought gold was quite interesting. The fact that gold didn't continue to rally yesterday after the market had another blowout day. I don't know. You have any thoughts on why that may have happened, mate? I mean, the question really is: do you think we are, you know, there's a bit of an overreaction, and actually this becomes a buying opportunity down here in the global equity market?
I think personally, because I also deal with stocks, the S&P is the Asia indices, be it the Hang Seng Index or even the Straits Times Index. What happens is that we are on a downtrend since a month back. Then it's usually the Asia indices we will follow the S&P 500, but this time out there's a bit of a divergence.
Yeah.
So the Asia indices actually dropped way before the S&P reacted.
Yes. This is the Hong Kong. Yeah, actually similar to the FTSE in many respects. The FTSE seems to lead the charge a little bit to the downside. Earnings from the S&P were pretty good. Right, market's about to open up. Let's just have a quick watch of the first few bars here. Let me change this to this one. Now, as I say, I am looking at the longs this morning. yet again. I think we got a half decent price down here. We are opening up to, let me double check. I'm going to close that down so it doesn't put me off. Okay, some of the markets, some of the shares are just taking a little while to open. It looks like the market's pretty poor when we start off. Okay, we're going to need to give it maybe 15 minutes just to kind of come through. I don't see too much in the way of decent percentages to the upside here. So looks like there's still going to be a bit of a struggle early doors this morning, and it might even take the US session to cheer us up. That's the way it's currently looking. Kind of flat-ish. We see HSBC moving to the upside. Interesting one that, because HSBC are hugely connected to the Asian markets. We're seeing Aviva and Centrica also move to the upside. Vodafone is struggling around about zero. BT Group is struggling around about zero. It looks like quite a few of them are just about zero. Now, the main losses of the top 20, still the airline stocks, International Consolidated Airlines still struggling at 1.5% to the downside. EasyJet also struggling down 1.5% to the downside. Now, this is the first 5 minutes of trade, so I suspect there's probably a few gaps that has occurred with those particular markets. So they may well recover within a 15-minute period. So let's look out for that. But for right now, I really like the FTSE, and I really like it for a long, and I'll show you why. It's purely technical, but we are at a, which I don't love, purely technical entries, but when you have a situation like this, now this is a monthly chart on the FTSE 100, and there is just a little primary trend line that flips up just about here, and we're right on top of it. So we got a low down here, second touch here, and this is our third touch. Now there's also a little horizontal level along here. Now I'm not exactly sure where it sits, but if we put it at the lows, then we can see that there is a closing price there that moved to the upside. There was resistance there that didn't manage to get through. So I like this level. I think this is a strong level. Now the question is there enough of a catalyst apart from the level to take us higher? And at a significant point as we do have, I think there could well be. So as I say, I am long the market. I don't need too much out of it. I need about another 90 pips to get myself into a situation where I'm actually in profit. But you know, because I'm long in a few places down here. But let's see what happens for the day. Get it to test this level. I'm in really good shape. Close the gap, I'm in great shape, but I probably won't be plumping for that straight away. What I am really looking for today is for the market to give me just a little bit of a relief rally, if you like. Now, I'm going to need to decide what I'm going to do, whether I just take things off and wait until next week, which I may well do. But I'm just looking for the market just to come up to somewhere around about this level. Now, this is a daily chart, so somewhere around about this level on the daily. Just test the low of 2 days ago, and then pop back down again, and maybe then we get to pick it up, you know, somewhere around about a trend line down there. I don't know, but then we could be looking for a second or even third wave to get us up to close the gap. Maybe even more than just 2 waves, but I'm just waiting to see whether we get some sort of relief to the upside. If we do, then I'll be taking profit and probably calling it a day for the rest of the week, just because the market has been pretty tumultuous, and really we should be looking for downside. I don't see how a lack of confidence with the coronavirus right across the board is going to be fixed too quickly, and even liquidity. I don't know what do you think about this, Lloyd? Because this is the thing, the coronavirus, you know, appearing in the world economy as it has done, I would suspect, you know, we've had trade wars which put a bit of a bomb under the market, but they could be rectified to a certain degree with central bank and with fiscal policy. But you know, can they really do that with a virus? What do you think about that?
Sorry, Ash, I don't quite get the question. As in what?
Well, can they? You know, is there any amount of central bank intervention that that could buffer the market in the same way that it could do when we had a situation like the trade war, because the trade war to a degree was to do with money, if you like, but this is a virus which has nothing to do with money. I mean, what kind of tools can they possibly use? What kind of tools can a central bank possibly use to curb something which is medical?
See, that's a good question. I think a lot of people is also thinking about that. But truth to be told is I don't have any answer. I don't have any good theories for that. But I would like to think of it this way: is that because we all know that there's a pattern to a flu virus. I mean, during the winter days, it becomes stronger. During the summer, usually it dies down.
Yeah.
So the bankers knows this. The medical sector knows this. So it becomes, to me, I see it as a stress test for the central bank, because if the market is in a bit of a turmoil due to the virus now, the central bank actually, to me, need not respond much, because eventually the market will recover when the summer days comes. But they can actually, and we know that for their tools are quite limited at the moment due to the QE cycle. So whatever new tricks they have up their sleeve, I believe they might be doing some kind of testing now. Yeah. So in the event that when they do need to really intervene, they have some idea that what can be actually done. Unlike the negative interest rate in the past, whereby it has not been done before, they are just basically in the blind.
Yeah. Yeah, so it's gonna be guesswork. But so really your theory on this would be that it will probably ultimately sort itself out in a period of time.
For the virus, I believe so. I mean, looking at the past patterns for similar flu virus, be it the SARS or the MERS, the summer days usually by 10th, even before June period, usually it dies down by itself.
Yeah.
Unless it managed to evolve, then we may have a serious issue on our hand.
Yeah. So, good morning, Starmax, and good morning, LT as well. Jeff's not with me today. Actually, I don't know what I can't remember what commitment he's got. He did tell me last week, so it wasn't out of the blue. So we have Lloyd in with us today. Now, is there anything that you're looking at, Lloyd? I've got a couple of currencies that I've kind of earmarked as of ones of interest, and I'd like to get your thoughts on it as a currency expert, which I am not. But is there anything else that you are currently looking at for potential trades, either today or at some point in the near term?
Yeah, I have a couple. I think we can actually grab the screens.
Yeah, let me show you. Let me pass it over to you. So if you know how to use it, you just share the screen.
Okay, I believe that's my screen. I won't go to the gold and silver chart because this is a chart whereby it's interesting to me. I also want to hear your view between the gold and silver chart, but okay, let me put that.
Oh my goodness me! Bitcoin yet again goes down from near 10,500 down to near 9,000 within the space of just over a week. Another fantastically volatile period for Bitcoin. Sorry, buddy. Yeah, what we got?
All right. I think the first that I'm looking at is actually dollar Sing. Yeah, simply just by looking at cyclicity, it has given me one lower high. I do have one lower low. So once price actually kind of break out of this, wait a minute. Yeah, kind of possibly give me some bearish momentum follows through. I'm actually about to short this pair.
Okay.
Yeah, in 2 hours time, I'll be interested in shorting this pair. I do have a reversal bar here, but it's just that there's also some rejection of the pivot, so I'll be cautious about it. But once it closes below, that's my final trigger. So I will be probably entering this in 2 hours time. Yeah, this is a H4 chart, so I don't usually enter in the middle of the when bar is forming.
That's an interesting chart as well, actually. Because if I look at that on closing prices, then I do actually see a head and shoulders pattern there on the H4 as well. So and where it's currently at would be the top end ish of a right shoulder. So it does look a bit negative. I mean, I find the dollar quite an interesting play, I have to say, because economically, I don't I don't know where the state of Singapore is, of course. So we might be we might actually be comparing a pretty decent economy in comparison to another one that's possibly going to struggle. But economically, that the United States continued to post fairly decent numbers. But what was interesting to me is that that it wasn't turned to as a safe haven. After what we saw with the outbreak, I thought the dollar might be another rush to safety. People would rush to the dollar and would rush also obviously to the yen and to the Swissy. But that didn't seem to be the case this time. I even was I looking at the euro yesterday and saw a huge spike in the euro. So the dollar situation, I think it's quite interesting in this. But yeah, but the last 1, 2, 3, we've had 3, and we're into our 4th potential day of upside in euro dollar. So I don't know where this weakness is coming from. Have you got a theory on that, or is it just going to be a purely technical play for you?
I don't think it's a technical play for me for dollar SGD, because if you look at dollar SGD, it has been on a rally since the start of the virus, which is something on 20th Jan. So economically, fiscally, the Singapore government, we has already said that due to the virus, our economy weakens, we need to cheapen the currency. So this is more or less expected. But like I mentioned earlier, is that on the European side, US side, it's only recently that they start to catch on to the virus. So to me, it makes sense that they have a late reaction. Yeah, since they have gained so much, now it's a late reaction. To them, it's early because they've just gotten some of the virus over. I mean, it's not a nice thing to say, but yeah, that's a fact. Yeah, so once I think the people realize that, oh shit, we are getting it too, then I don't see why US will become a safe haven at that point of time.
Yeah, yeah. But what about the numbers that generally speaking? I don't see I haven't seen a huge turnaround. We might have had a bad print actually recently from. I'm just going to check some of the data here, economic data from the United States. There might have been one bad print, which I'm not sure why that would create anything too bad. What we got? Bank of Japan core CPI. Actually, a slight raise we've had this morning. I think it was the end of last week. What do we have? Dollar.
I think partially Trump has ended his India's visit, I believe. Yeah, so there might possibly be some buying when he goes to India, expecting to come into some deals with India, but he left empty-handed.
Yeah,
that's a bit of a disappointment.
Well, we got last Friday's manufacturing numbers were not contractionary, but they are weakening. So I wonder whether that might have something to a possible play on it. Flash PMI out of United States last week was 50.8, expecting 51.5. So a big miss, but also I think that they are starting to come off. The trend is starting to weaken with the manufacturing PMIs as well. Flash services PMI under 50% as well. So that could be a significant aspect. So yeah, I see the play with the dollar actually. That would make a little bit more sense. That we could be looking for some further dollar weakness. How do you get the data from Singapore? I don't see Singapore isn't printed in a place like Forex Factory. How do we get that data?
No, actually, I just read it off the national dailies.
You just get it from the daily news, do you?
Yeah, I also don't find much of Singapore news in the Forex Factory or wherever any platforms. Yeah.
Right. Okay. All right. Well, I'll have to look into that. Okay. So we're looking at some weakness with the dollar against the Sing, and it looks like you got a Swissy chart as well. What's going on here?
Yeah. So also looking at weakness from the dollar Swiss. Yeah. So dollar C and dollar Swiss both have similar play to me. Price goes up, come down, goes up again, lower high, come down. I have a lower high here. Once this buy is confirmed, what I wish to see is actually for this bar to close below the previous level, and then I'll be really interested to actually enter a short trade. Yeah,
gotcha.
It's more or less the same situation with dollar Sing.
So would that just be a case of if it closes down? I really like the Swissy. You know, as a potential play. I don't see them being in. I don't see Switzerland being in a hugely a strong position. I think I saw one number which fooled me a little bit, which looked pretty good. But I like the fact that they're running a trade surplus. That's the one aspect of this. And I think if we are going for a flight to safety, then you probably want a currency that runs a trade surplus over one that runs a trade deficit in this this kind of environment. Which makes the
Yeah.
pound quite interesting, which we might talk about in a little while. So yeah, I like the Swissy. So you'd be looking for a close under the current level on a 4-hour time period, and then we'd be looking for potential shorts.
Yes, the first part of the setup is actually ready. I mean, I don't know whether you realize I always like to trade previous support and resistance kind of setup. So the first sign is already given. I just need the second confirmation, and then I'm good to go.
Right.
Yeah, Kiwi dollar. Now this is the one whereby I will be cautious about. Yeah, because I'm expecting dollar weakness, but at the same time, I think the New Zealand dollar is actually weaker. Yeah, so for this kind of trade whereby I'm playing a weak against a weak currency, I'm a bit much more cautious. Yeah. Just purely from a chart perspective, I'm just waiting for a breakdown of this level, and then I'll be shorting it.
Yeah.
But at the same time, at the back of my head, I'm keeping in mind that the Chinese government is actually desperately wanting their factories to start up running again. That means it will actually bring about the rally of the commodity currencies. But 2 days ago, that was my thought. But as of today, I realized that most of the factory that's starting out in China is actually belonging to the second and third tier city. The first tier city is still quite laggish. Yeah, so that might explain why the commodities currency have not yet rallied so far.
Yeah. Yeah, I get that. I mean, I don't. We got trade balance data out from New Zealand later on, which might give us a little hint about the state of their economy. Also, the business confidence is going to be reported overnight UK time, so midnight here. That would be another thing that I'd want to watch out for to see where we're at. Previous was at minus 13.2, but it is climbing. So I suppose, you know, it's one of those that business projections look to be, certainly in the last 1, 2, 3, the last 4 prints have all been better. Now they're not giving us a forecast as yet, and whether they do that on this particular number, I don't know. But that would be something that I'd be looking at to see whether the Kiwi has got a chance at least of moving higher.
So I hope, yeah. So that means the Kiwi I'll hold off until the news come out and see what's going to happen to the charts. Probably not a good idea to enter before the news.
Yeah, I agree with that, mate. Yeah, I totally agree with that.
So then the next one that I'm looking up for. Am I going on for too long?
No, mate. You know, no, this is great. It's good that we do have a bit of a currency section here because it's not something I deal with, and we'll talk about the pound in a bit as well.
Yeah. So Euro Yen also a pretty setup. We have a double top recently. Then price broke down, waiting for a retest. And once a retest is confirmed, I'll just go in. So to me, this kind of setup is some of the clearest setup that I actually have in my playbook. That I would love to jump in if the setup is confirmed. Swiss yen is actually one of my poorest performing currency, but it's just that when I scan the chart, if the opportunity is there, I usually won't discount it. So Swiss yen, pretty much the same play as Euro yen. Double top, price broke down, waiting for a retest, and then I will be happy to trade.
Yeah, so with the Swiss yen, I suppose that's a tricky one, isn't it? Because of the the fact that they could be
both are safe haven.
Yeah, it's a one of those ones that I'd find kind of tricky. The one that the currency that I'm really interested in is the CAD yen. Because the move to the downside has been pretty fruitful, and all I really want is for oil to hold a level, and I think the CAD yen would be a really good play to the upside.
Yeah, I'm also watching this CAD yen. But my analysis tells me that I'm actually looking for shorts,
Right.
not for long.
Oh, yeah. I see that.
Yeah, so this is purely from technical standpoint, not factoring in the fundamental. In fact, oil I did get into a trade a couple of days ago. I expect you saw same due to news that the Chinese will be restarting the factory, so they would be consuming more oil. But apparently, didn't really rally. Yeah, the factories that actually consume more energy actually use more coals. Yeah, black coal rather than oil. So yeah,
Oh,
it
right.
rallied
Okay.
for a brief moment. Then it went
Yep.
down.
Yeah.
CAD
Yeah,
yen, so again,
it's a bit of a numbers
yeah,
play.
sorry.
To be honest, mate, I don't really, apart from the fear, I don't get the rally with the yen. It's just like it's standard, isn't it? When there's fear in the market, when there's problems in the world, everybody buys up the yen. But I don't really get it as a kind of from a fundamental point of view. I don't really get the rally with the yen. I don't see the numbers being particularly healthy, and I think as soon as there is a relief in Corona, and it might be a month, as you say, it might be 2 months before we actually see the relief come in. But so on a short-term basis, I could, yes, this thing could go a bit lower, but I think the CAD yen, as soon as it starts to bottom out, it could be a pretty decent play to the upside.
You mean for yen? I think I heard from Julian, if I'm not wrong, or was it someone else that yen apart during crisis that people will start pouring to the yen due to the safe haven status. The other reason is that wherever the Japanese economy is in trouble, actual trouble,
Yeah.
As in the corona now, they have the businesses in Japan have a sense of duty to actually bring back funds to actually prop up their own economy.
Right.
Yeah, so that might be another reason why it's actually it has a tremendous climb up.
Right. Interesting. Okay. Yeah, did not know that.
The last I would like to share is actually Aussie yen. Yeah, so you can see that price broke down. I didn't quite get a nice retest on this level, but there's a pullback, which I'm happy enough. Yeah, so once this pullback is definitely done. I'm just waiting for price to actually close below, and then again I'll be happy to enter a short position for Aussie yen. So that's the for today's trading at least, that's the final pair that I'm looking at for Aussie yen shorts. Yeah.
Sorry, mate, I missed that.
Was just saying that I'm looking for Aussie yen shorts. So price broke out of this consolidation.
Yeah.
Didn't get a nice pullback to this area, but instead I did get sort of a pullback, just waiting for price to actually close below the current level. I'll be happy to enter.
Brilliant stuff. Brilliant stuff. So you're effectively, it sounds to me like you're kind of long yen. The play seems to be like, for long yen as much as anything else.
Yeah, it does seem that I'm longing yen, but fundamentally I'm still bearish about the commodity currencies across the board.
I see. Okay, so it's more that's the play right now, and that's got a lot to do with the price of oil for you, is it?
Yeah.
Okay. So we're just looking at oil as a potential barometer. I'll show you something in a moment with oil. Yeah, let's have a look at oil. I don't suppose you could bring up a momentum indicator, could you?
Sure. As a momentum, let's see. Period 12 or which period do you prefer?
Let's go 14. I think it really matters, but let's have a look. That's what I quite like with WTI. Yeah, I mean, there's a huge, even back, when it's the very first time it drops. Now I don't know. I don't know how you would necessarily use this one to trade from. In actual fact, if you bring up an RSI, it might give us a slightly better picture.
14?
Yeah, RSI and 14. It's maybe a little bit cleaner, but the fact is that that momentum to the downside is weakening. Now that doesn't mean that we're going to get a turnaround. I took a trade yesterday in the FTSE 100 that Anybody, actually, let me post that in now. And anybody that was looking at the broadcast group yesterday would have seen my reasoning for taking the long. It didn't work out, to be fair, but I do look at these momentum indicators to see whether momentum to the downside is weakening, and I do see that the momentum to the downside in oil is weakening, and we are at fairly significant levels. So can it get a base down here is the question. We probably need to see something else to make sure that we do have a base, and it is going to stabilize down here. But if it was to stabilize down here, then I would suspect that something like the CAD would do pretty well out of it. But it's just the question: can it pause here at least?
I believe it has a fair chance of pausing it here. Yeah, to me, at the $50 level, usually price is a good gauge to know whether price will fall or to rally at the $50 level. So when you look at the weekly chart, usually when we see that, at least in my past experience, is that if price does break the $50 level, it will continue in the shorter time frame, but on the longer time frame, as in the weekly or daily charts, this will be a good area to trade a bounce. Yeah, I don't really like to trade a break to the downside at this area, but more of a bounce off this area, because 50 seems like a good magic number to trade WTI. It's just, that's just my opinion.
Yes, yeah. No, I get that. I get that completely.
Yeah, technically speaking, at least from the past, it actually did bounce off this area quite a few times. Yeah, so I'm keen to see whether this will be a false break or price will just dip below and come back up again.
Yes. I mean, I guess we could wait for the trend line to break. And if the trend line was to break, it's pretty steep. But if that, in fact, can you switch that to a 4-hour chart? And let's have a look at it on a 4-hour chart, because that's a better trend line. I guess if that trend line was to break and pop back to the previous high, then that might be not even that high, actually, around about the 51, 52 level, is it? Yeah, but about that one down there. If it came down back, if it broke through and came back to that level, that might give us a clearer indication. And it's going to be a lot of waiting. There's no doubt about it. We are in a situation with this market which probably could do with some further flushing out before we see some genuine risk on come back into the market. But oil might be one of those, and it might be. I mean, I don't know what you think about this, but I don't know. Maybe currencies you just trade them as normal, but certainly from my perspective, it might be that we just need to take a bit of time away. We can certainly take advantage of further downside in the stock market. There's no doubt about that. I am looking for a bit of a surge, but ultimately I'm looking for downside as well. But if you are a bull, then this is certainly not if there's an area down here you can buy, no doubt about that. You want to go in light and see how it goes. But if you're a bull, then you need to see a whack of a turnaround for these markets to actually start promoting some further buying. So every time it pops up, it's probably going to get pushed straight back down again with the current climate.
Yeah, with the current climate, I believe the fundamentals will play a huge role. If there's any whisper of some sort of test kit or what do they call it, vaccines, be it the indices, stocks market or oil, it should pop back up, because once there's whisper of that, that means that business will be back to normal.
Yeah, it makes complete sense. Well, the markets are fairly quiet right now. This is kind of a sanguine type of market that's going on right now. It's a little bit weak. I'm seeing the FTSE 100 top 20 stocks are around about. Let's have a look. Yeah, there's actually only a couple that are in positive territory, but the ones that are negative, the majority of them are just popped into negative territory. There's nothing too concerning right now, but we'll probably see the lows tested again at some point. So I might well be in hedging mode fairly soon.
Actually, Ash, if I understand, in the past you do hedge with gold, am I right?
I beg your pardon, mate. Say that one more time.
I mean, when you hedge, do you hedge with gold?
With gold? No. I'll hedge off the foot. So if I buy the FTSE, then I'll also take a position in the opposite direction. But you know, there certainly would be an argument to be using gold or the yen or something like that for a hedge as well. So the only reason I don't hedge with gold is that I haven't worked out the numbers. You know, I know if I go long in something, then I know to hedge it off, I just need to go short exactly the same amount. I need to put in the same amount on the other trade. But with gold, I've never worked out the equation to know how much I need to hedge in the opposite direction. So I should get into that really, and I might well do so at one point. But no, I don't hedge with gold.
Actually, I would like to hear your opinion on between the gold and silver chart. Yeah, because to me, the silver is always lagging gold. I mean, these two generally follows the same direction. It's just that silver lags gold in terms of rallying or even dips.
Yeah.
So to me, gold has already rallied since start of 2018, end of 2018. This is a weekly chart of it. Yeah. So you can see that first retracement, second retracement is gone. I mean, to me, gold has played out its move. But comparatively to silver, which is lagging gold in movement, same thing. This is a weekly chart. So you can see that gold starts to rally back at late 2018. So silver, the rally only starts in mid 2019. Yeah, so it makes its play first retracement. And just looking at this part, it seems to me it's very, very similar to gold in these portions. Yeah.
Yep.
So you can see the dip and gold, silver. So I wonder if this, to me, this would be a good buying spot for silver. Yeah, be it if you're a pattern trader, you may be waiting for the cup and handle, I believe, or it's just a break and retest for the usual technical traders.
Let's have a quick look at silver as well from my end. Let's have a look. So, yeah, I mean, it's got a hold here. It's certainly not a buying opportunity yet, but I get I get what you're saying completely, and I would have thought that the silver, yes, it would be a better play than gold, just because gold is so overinflated in price, and the fact that it's cut back to as it has, it's bounced pretty well on the daily chart. But do you know the problem with silver? If you look at silver on a daily chart, the issue is that yesterday's bar was just a wipeout. You know, it wiped out quite a lot of price action. So yes, I completely get your sentiment there, and I suppose a trend line from the 28th of November running up to around about that February time as well would be of interest. Yeah, that low around about in November, that one back there, yes, and then running up there. That kind of that area for it to cut back to, I think, would be of high interest to me, because it's got a really this is suggesting that this is coming back at this particular time. So I think this has got a pretty decent chance of coming back a little bit further. Yeah, that's the way it looks to me. I mean, you know, just looking at the market right now, as I say, it's pretty sanguine, and it's not really moving a great deal. I am looking for the market to base out at the minute, but it doesn't look like it's going to fly. So in that kind of scenario, I'd be looking for things like maybe even gold as well, but certainly silver, just to continue to ease back a bit, and as I say, maybe picking it up down there on that trend line might be a place that we can start looking for a potential buying opportunity.
Yeah, so I guess it's worth keeping a lookout.
Yeah, I'd say so. I mean, it's got to be a play that we make. I mean, it does depend on how long this thing sticks around for. But if it sticks around for too much longer, then you've got to be looking at some of these safe haven plays, and I would have thought you'd put silver in that basket as well. I don't know enough about commodities to and the precious metals to really make an informed decision on it. I can quickly check the COT data.
Silver, industrial wise, silver is actually a much more useful metal to the factories compared to gold.
Yeah.
So again, if if the factory does resume back in China, so I would assume silver will also start to pick up. Yeah, because they will need more of it for whatever industrial use they need it for.
Yeah, I totally get that too. Actually, it just seems that you know, people seem to be buying this stuff right now because they're not getting a yield on anything. You know, the bond yield just plummeted yesterday. What I'm seeing on the COT data right now is the commercials are heavily invested yen, they're heavily invested euro. Interestingly, that the pound is heavily bearish according to the COT data. Gold also very bearish. Silver's kind of bearish too. So you know, the COT data where the commercials are sitting is certainly suggesting further downside in both gold and silver. But how anybody can sell gold right now will be a little bit of a bit of a mystery. But if gold is to start easing back for whatever reason, then I suspect it's probably going to plummet. As for the dollar, dollar's around about midway. Same with the Dow actually as well, interestingly.
Yeah, earlier on you said you want to share with us some pound. Usually enjoy your views on the pound charts.
Yeah, so let's talk about the pounds now. The pound. Yeah, so let me if you give me back the screen.
Okay.
Right. Let's talk about the pound because the pound is you know, again of interest. Looks like this FTSE 100 is struggling to catch a bid here, and if it breaks down that level, then we're probably going to see the lows again. And it might still, you know, I'm still going to treat this as a buying opportunity, but it's struggling to break out right now. It's going to need something said, I would have thought, to get it going to the upside. The pound is is of huge interest to me. I have to say, I am currently pretty bullish on the pound. I think the data points on the pound have continued to surprise to the upside. We've also got this budget that we keep mentioning on the 11th of March, which, if that is expansionary, then that could also drive the pound up. I think the big question, in fact, it will be expansionary. That's not really the that's not the quandary. I think the big issue and the big question when it comes down to the pound is how do they fund the expansionary measures that are going to be put in place? Do they raise taxes or do they borrow more? Now, in an environment as we have, borrowing more would seem to be fairly dangerous. But that, you know, so you'd think that they might edge toward taxes, or they might not worry about it. They might be looking at, you know, way further out in the longer term. But yeah, it certainly would seem to me that that this would be bullish for the pound. So I am bullish the pound. What would concern me a bit is the level that we currently sit at. So when I look at this on longer term timeframes, yeah, I suppose actually this isn't a bad area for it to start to rally from. I would have liked it back here, or even dropping down to this point around about the 125 level, or maybe 127 before I got bullish on it. But it certainly appears right now that this isn't too bad. A level to try and pick this one up again. So yeah, I mean, my views on the pound are certainly for some upside, and it's just going to be a question of when. I do have buy signals on this one on the shorter term time frame. So if I consider this on the weekly looks pretty good. The monthly slightly questionable. I think this is the level, the 127 level on the monthly. I'd like to see it down there before picking it up. But creating an inverted head and shoulders, that would look pretty good to me on a monthly chart. If we did see something that came back down to that as our left shoulder, and if it carved out a right shoulder here, I think on a technical level that's going to start looking pretty good. But we are starting to see the kind of Boris bounce scenario taking hold. So any cutback down here with something of a reversal bar of some description, I think would give us a decent technical reason to go long the pound. And I think that there are fundamental reasons to be looking for long the pound as well. So I'm pretty bullish, mate. I have to say, it's just a question of timing, and it might be here. You know, that there is an area of support here, so it might be here. But I think I'd be really comfortable if it came down another couple of hundred pips and gave us some sort of reversal pattern on the monthly.
I think you're on the same page as Justin. He's also quite bullish for the power pairs.
Yeah, they look pretty good. You know, you have to say that the numbers on the pound have, as I say, they've held up pretty well, and I think surprisingly so as well. So so I don't see why the pound couldn't rally from this particular point. We have to continue to watch the numbers. You know, what's been quite interesting is that the numbers have been pretty good, but the pound hasn't gone anywhere. So what are they waiting for? But the COT data suggests weakness, you know, further weakness with the pound. So I'd probably want to see that turn around as well. You know, the commercials are still bearish with the pound, which I'll show you guys now. When we look at this COT data here, oops. Then it is suggesting, look at this, you know, between 6 and 18 months out, there, you know, that there's still some pretty heavy selling going on with the pound. Checking the seasonal charts as well, looks like the pound takes a bit of a dip. So sometime around the March, mid-March to late March, if we take the historical data, would see a potential decent rally with the pound. So that also could be something that we should consider around about the mid-March area, right up until May. It would look to me like the pound would be a fairly solid buy. So those numbers continue to be pretty good. Maybe it cuts back to an area that we can get interested in. Then and that happens around about the middle of March. I think we could be pretty comfortable buying up with a pound.
So we got probably roughly about 2 more weeks to go to see if any
I think
present
I think so. And what would that mean? Let's have a quick look. You know, right now it's kind of through that that particular level, but not on the 4 hour. The 4 hour is certainly sitting at a bit of a resistance zone here. 2 weeks out is going to see us around about. Well, it's not actually going to cover my chart here. Yeah, sometime around about there. Let's see if there's any line on the bottom. That line's going to be too steep. Yeah, you see it's through there as well. So it would suggest some further downside. I quite like it. I mean, we do have maybe a complex looking head and shoulders pattern up here as well. So yeah, I think some downside with a pound would get me interested. And it could be this low here. So let's see if it's down here at this particular time, then I think we can start looking for upside the pound, and then we can also start looking to see where the trend line genuinely exists. It's probably going to be somewhere along there actually at that particular time. So that would also help. You know, I'd have this line you know, drawn every day that I'd want to trade the pound to the upside. So yeah, if that promoted some buying, then I think the pound could be of interest, taking out this trend line around about this particular time. So yeah, it's a bit of a wait and see, man. And I think, you know, that's the state of play right now. We're just going to have to wait and sit these ones out just for a little while longer, and see if we actually do get some opportunities. But it doesn't seem to me like it's yet. We do seem to be having a little bit of a Wednesday effect as well. Right now with the markets, the FTSE 100 continues to struggle, but without anything you know, hugely negative. I would still see it coming down here as a potential buy zone, but now it's taken out this particular low. It looks like it might well come down and see these you know, might bottom out down here one more time as well. So but quiet. You know, the market is pretty quiet today, so I don't think we got too much to do. in the way of trying to get any opportunities right now. But I think it's pretty good to plan, and you know, as I say, I think planning on the pound would be pretty good, and continue to watch the numbers. You know, the numbers come out well, and the pound continues to weaken, and it weakens into that mid-March kind of time frame. I think we should be looking to buy the pound up.
So in your words, continuing weakness for the next 2 weeks, and probably some buying opportunity if it bottoms up mid-March.
Yeah, I think so, and also, you know, with that continued potential continued weakness, I wouldn't want to sell it. I think that's probably the most significant aspect of what I'm saying. You know, even though it looks kind of weak, I wouldn't want to sell it. The COT data suggests some downside, but I think there are other factors there that could drive it up. Just to get some of these comments as well. Oil going to 35, according to StarMax. I think that's what he's talking about there. Yeah, and that's the thing. You're absolutely right, LT. You know, it would cost them too much to get out of the ground at some point. GDP have very big head and shoulders. Yeah, it does. It absolutely does, and that's why maybe we could continue to look for that further weakness in the pound. But I just not that keen on selling it. You know, and interestingly, if we're looking at a 2-week time period with the pound, where we would potentially be looking to buy it around about mid-March, that'll run in pretty nicely with that budget release. So that would suggest we can wait for that budget announcement. And if the budget announcement was to promote some further upside fundamentally, then we've also got a time horizon to suggest that we could rally right up into the May timeframe, because you know, and things move seasonally for many reasons, but with currencies and certainly with the pound, one of the reasons that it does tend to rally at that time of year is because we have our tax year ending and starting in April. So that is when the Treasury will be getting quite a few tax receipts in, and it does generally start to promote some spending. So that's another reason that the pound has got a seasonal bias around about the middle of March. So let's look out for it. Yeah, you know, as I say, I totally agree with a bearish outlook on the near term. I think the numbers are decent enough to hold it up, though. So I'd be a little bit cautious about trading it even down to those areas. Oh, the S&P FTSE Dow, all ungrateful. Do I think that it's going to fall or retrace back up? My personal view is that yes, we should get a bounce. You know, all of these. If we're looking at the FTSE 100 is at, as I said earlier, it's a significant area of support. So, this isn't a question. You know, we've got that area that it could still fall down to a little bit further, but this is the trend line I'm currently looking at. That would suggest that it's at least going to attempt to try and hold here. So we need another day to kind of flush out the bears if we are going to hold here. So you know, it might be looking into tomorrow that we really start to kind of get a bit more heavily long the FTSE, because it's really going to show that it can hold here first of all. But yeah, I like where the FTSE currently sits. I also see a level of support along here as well, and there's a level of support where we currently sit down here as well with this point here, and arguably that, you know, this same kind of area along here. You can see it was resistance. So pretty decent line along where we are. So technically speaking, do I think the FTSE is going to rally? Yes, I do. Do we have a reason for it to rally? Not right now. So that is a bit of an issue. Could it fall down a little bit further? Yeah, yes, it could. But you know, the way that I'm looking at the FTSE right now is that that any further selling that's to happen may well be just the dregs, kind of like, you know, finishing up their business, because yesterday and the previous day and maybe even you know, Friday. So Friday, Monday, Tuesday, I think we saw the major players kind of making their making their play. So we might still have some short selling going on here, taking advantage of another move. But I think we could feasibly start to bottom out around about this area. So watch out for today's bar and see what it suggests. And if it suggests a hold, I do think a rally back to at least a 2% rally to the upside of the FTSE is more than probable. Now let's check out some of the others. The S&P. Look at that monthly bar. I mean, that if that was to close anywhere around here, you would not be wanting to go long ultimately with stocks in the United States. But I think it's going to try in the next couple of days to try and get back up again. Now look at the S&P for an area not too far away from this particular breakout area as well. So decent line there, touch there, touch there, touch there, touch there. Maybe a little bit low with the S&P. Another 20 pip drop possibly, and then looking for a possible turnaround. So that might give us something of a reversal bar by the end of today as well, or maybe tomorrow. So a little bit more downside is feasible, but I'd be looking for a turnaround there. And the Dow would be a similar situation where the Dow is got to get back up to this point, because this is the strongest point of support there. So I think it probably will try. Where is it sitting right now? Not quite there. So even the Dow could probably do with coming down another, or possibly another 1%. So maybe a 1% drop on the S&P, 0.7%. It's near the 1% drop on the S&P. Maybe the Dow as well is feasible. And finally, the Nasdaq, which is continuing to plummet right now, maybe slightly in. Look at those bars; they are ugly. They are ugly bars, and the Nasdaq. Really, the Nasdaq has been the most bulletproof out of all these. So as the most bulletproof, when things really hit the fan, then it becomes probably the most susceptible to their bulletproof vest failing. So the Nasdaq putting in a monthly bar like that is going to be incredibly bearish. If you're looking at any market to come down, then it would probably be the Nasdaq. And it's purely because the move to the upside has been so parabolic. You very rarely see moves like this not swallowed up in some respects. So yeah, the Nasdaq, you're right there, mate. The Nasdaq's got another potential 5% drop. So we might be looking at maybe 1 to 2% in the S&P and Dow, and possibly the FTSE. But I think the Nasdaq could come down another 5%. But do I expect a bit of a bounce first? Yes, I do. So I'm looking for a bounce with these markets, but ultimately we've got to be looking for the short. We just need a better price than we've got right now. I'm using the longer term time frames, Chris. Mainly the weekly. I've just done a bit of analysis on, but you do want to look at the monthly as well, because it's we're about to finish our monthly bar. So these ones are now, it becomes prevalent. I wouldn't worry about the monthly charts up until the final few days of a month, but because we're in the final throes now, this bar becomes extremely significant. FTSE 100, same thing, hugely negative bar there. Checking out gold, it looks like that might well have broken to the upside. S&P engulfing bar, high test bar, call it whatever you like, but that's in incredibly bad shape there, and the same with the Dow as well, another engulfing bar that looks incredibly negative. So yeah, check out your monthly bars really for the next couple of days, because that's going to give you a significant and fairly decent idea of direction for right now, I would have thought.
Might have some downside.
Oh gosh, yeah, we're definitely looking for some downside. Yeah, it looks like it's going to be a big sell-off, Starmate. It certainly does, mate. It certainly does. The question is not whether that appears to be the case anymore. I mean, you've got to be careful, because if you want to know how bars have their most, where bars are their most significant, then go to an hourly bar and look at the last 5 minutes of price action, and you can see an hourly bar completely change the way it looks within the last 5 minutes. Look at a 5 minute bar and check out how in the final 20 seconds, a 5-minute bar can completely change the way that looks. 15-minute bar the same, and it's going to be the same for this monthly, which is another reason that that I would have thought we would at least attempt in the next couple of days to try and have a bit of a rally to change the shape of this bar. But if they don't, if this is going to be the significant thing. If the bulls completely step aside and don't attempt to get this bar back up again, then that is an extremely, extremely dangerous and grave situation for the stock market. But if they give it a go, and let's say they win something back, then it may well hold here for just for a little bit longer. So the next 2 days are pivotal when we are looking for significance in a move. And you only need to see this, with something like this. This is a good example, actually, really good example. Really bearish. Really bearish here. Now that is back in 2000. That's December 2018 on the Dow. Now let's see what happened with that. In actual fact, let's mark it off properly. No, we have marked it off properly. Yeah,
that's a time where center is on leave. I think that's why the market fell.
Yeah, and look at it here. So December 2018, and it's this. This is December 2018. Look what happened. 26th bounce, huge bounce. 27th bounce, 28th bounce, and by the 31st, it had recovered pretty significantly in the last 1, 2, 3. In the last 4 days, huge bounce to the upside with the Dow, and that triggered a huge move to the upside and really got us going with the rally. So these last few days are really significant. Now, if you compare this to one that looks different to this, let's say this bar here, there was no push back to the downside. That is a significant message that one is starting to move up. And it's significant, you could argue that this one didn't rally at all, but look where it is. It's not in the same kind of situation. This one here had to get back up here to continue the upward look of the trend. It had to close in or above that previous low. So for this one to continue the trend to the upside, or to at least attempt to continue the trend to the upside, then it is going to have to close in and around 2,800, in and around. It's got to get back up there. So the question is, today, tomorrow, and Friday, will it try? Who knows? We just don't know, and there's probably got to be some significant reason for it to do that. And right now on the horizon, it doesn't look like it's out there. But that's what we've got to watch. And if it doesn't happen, then look out down below. Anything that then pops up as some kind of relief rally early on in March will probably get obliterated fairly soon. I'll tell you what, the other thing that I find interesting, Lloyd, Donald Trump has been I'll come to that in one moment, Chris. Donald Trump has been bragging about how amazing he has been for the stock market, and I wonder whether coronavirus might be. We've been talking about Donald Trump possibly being on assassination watch for the last 4 years, effectively, and I wonder whether it is this little virus that ends up bringing him down. Can he continue to brag about the strength of the stock market when it comes down to the vote in December? Will this be the actual break of the stock market? Because they don't have a lot of tools, right? I mean, if this thing does go really badly from here on in, they don't have many tools to really fix it. Interest rates are at record lows. Liquidity in the market is going to be hard. And as I said before, even with a liquidity play, will it make any difference? With a situation as we have. But I wonder whether it could be this that takes him out instead of anything else.
Don't usually on election years the market rally?
Exactly. Exactly. The election year, is usually, we do normally see a rally, and we're only in February. It's complete conjecture, and I'm being provocative because there's every chance the market will rally into the end of the year. There is a little phrase though in the markets which is how goes January, so goes the year, and this is the January bar. So if January is bearish, then the year tends to be bearish, and we do we do see that happen time and time again, and it's just possible that that all these markets putting in a negative close in January could well see some significant downside in the stock market. So how he gets out of this particular corner, I don't know. Now, when it comes down to using the lower time frames, so the lower time frames are for entries. The higher time frames are for trade direction, and they're going to give us an idea of where we want to go. But let's go back to this particular bar here. So when you saw this bar close up here within a 5-day period, then really when it comes into the next month, when you're coming into January, you're looking for trade entries. And it's simple, really. I've got two particular trade entries that I really like: double bottoms and break and retest. Really simple, but other people use different things. But I really like those two aspects. Now, if I was going to have a look at, say, in fact, let's bring this into a daily chart instead, just so I can get back to my level. So we're looking at January. We were looking at December, weren't we? 2000. So this is the area here. So January 2018. From here on in, I am looking to go long from this day forward. Don't really see a decent chance to do that, but you do see, because there's not a double bottom there. There's not really a high or low there. In fact, you go down to the 4 hour. So let's see what the 4 hour looks like. Yeah. This would have been my first entry. That would have been my first entry, because what I see here after the January run is an area of resistance here that broke to the upside, and as soon as it broke to the upside, then I'd be looking at this particular bar for an entry. It ends up failing, and then I'm looking for this bar. Again, it's a higher low, so I'm just looking for a higher low, and it's just exactly what you would have learned. I'm just looking for higher highs and higher lows. So as soon as I've made my decision on a longer term time frame, I'm just looking at these shorter term time frames to get an entry, and it's simply a higher low. Or if I see this thing going on here, that double bottom, and I'm convinced of upside, then I'll try and enter here. I'll try and enter here, at that double bottom. So as long as you have your direction right, double bottoms and breaks and retests are the best areas to get in. This is a really good one, actually. That was the area that it broke to the upside from. It comes back, gives you a reversal bar there, and then you get into that trade to the upside there. Would have failed in that particular instance, but I'm still looking for long, so I go in there. So there are just standard entries, the standard ways that you'd get into it, and it'd be the same on every single time frame. Would you agree with that, Lloyd? Is there anything else that you'd add to that?
No, actually, this is I would say this is pretty basic to what I look at my trades. Yeah, looking for daily for direction, and that some of my favorite setups are just previous resistance and support. So that would be the break and retest, or simply sometimes a higher low or higher high. Then that would be surface enough for me to actually enter on the lower time frame.
Yeah.
It's really simple, but just have to be patient about it for them to appear. That's all.
Yeah, and I think that's the thing, isn't it? It's just everybody effectively looks at the same stuff, Chris. We're all looking to as long as you've got your bias right, then how you enter the market just becomes that just comes down to a personal preference, a strategy of how to get in. A higher high, a retest, a double bottom. It doesn't really matter, but the big key for any trader is to figure out their bias. As soon as they've got their bias, they're in good shape. So you've got to get that right first, really. Right, we've run slightly over time, but let's pack it up. Who's going to fix it? Maybe it will be God, and this is an active God. These events do kind of come from nowhere, and it's certainly not a fiscal event. It is much more of a a natural event, as we've seen with the bushfires in Australia and everything else. That nature bites back eventually, and it's just been waiting to bite. And I think that this coronavirus might well be the example of that. So we will pack it up, mate. Thanks so much for joining me today, Lloyd. It's been an absolute pleasure having you in, sharing some of your ideas on the currencies, and obviously, you know, come and join us again. You're always welcome in, even when Jeff's here. If you want to pop in as a guest, but I'll probably be calling on you at some point in the future, no doubt, again. And if you'd be happy to come back, I'd love to have you with me. Mate.
Are we answering the call?
Awesome.
Actually, before we end the show,
yes.
Before I end the show, I just wish to share one last thing. I think I found something that actually supports your view, and I kind of like what I'm looking at. Let me see.
Yeah. See you, StarMax.
Okay. So actually, sometimes when I'm really confused about the market, I tend to look at the currency indices. Yeah, that will actually give me a pretty good idea what I should be looking at to look for direction in the currency. So this is actually the British pound in the index. Yeah. So for me, it's pretty simple to look at. Price is just going up for the time being. And if I look at it, this is our weekly bar. So since December, huge push sell down, buyers. And if we just look at the weekly bar individually, the sellers seems to me are actually getting weaker and weaker. Yeah. So once price actually manage, it didn't actually break this area, it holds pretty well. I think we do have a case of the pound gaining strength. Yeah. Because throughout the chart, we do have some push down, but overwhelmingly, I would say that the buyers are actually defending the area quite well. So we do have a case of the pound going to gain more strength. Yeah. That's
Yeah, no, I think you're right, and you know, back to the kind of point before, you know, I'd want to see a double bottom with a short-term time frame or a higher high, but I would want to see it. Yeah, if you went to a 4-hour, it's pretty scruffy, isn't it?
Yeah, the indices are usually quite filled with plenty of gaps.
Yeah. I mean, you know, it's really the point that I wouldn't want to trade it here because it's got to break through. But if it broke through that level around about the March time frame and came back and tested, then I'd want to try and be getting into the pound. So that would satisfy my parameters, if you like.
So that's the case. That's a good thing to look out for. Thank you, Ash, for that.
Thank you very much, mate. Really appreciate it. Really appreciate you popping in. Thanks to everybody as well for all your input. The Telegram. Okay. Lloyd, you don't know. I was just looking for it. What's the Telegram? How do we post in the online trading profits link?
Give me a minute. Let me search for it. I think I might have it.
Okay, Lloyd's gonna post it in. I need to save the link somewhere as well.
It's pop up today. Resource. It's trading resource, right?
Online trading profits. It's on the Telegram group. I mean, actual fact. Yeah, if you guys look on the Telegram group, you will be able to find it.
Okay. Should be. How do I pass it to you?
Oh, just could you post it on you? Oh, in fact, you can pass it on Skype. Yeah, that'd be great, actually. You post it on Skype, and I will post it in. Okay, so we will. I will post it there for you on Skype on YouTube, guys, and you can join us, and I'll be giving some ideas. Yeah, no problem, buddy. No problem. I will give you that now. Lloyd is just posting it in. Okay. Copy link. Here we go. There you go. There you go. It's in there, and I'll be posting trading ideas in there. You know, the FTSE 100 continues to move to the downside, so really the shorts look like they are still fairly interested down here to get out the market. But let's just wait for a bit of a turnaround. There's going to be an opportunity to get this market to buy this market up at some point. I'm just not quite sure when. Could still be today. It could still be today. You know, the market might well turn around at some point today. So that will be us. Thanks so much for everybody for listening. As I say, we'll be back same trade time, same trade channel tomorrow. I'll be joined again by Jeff. Lloyd will be back in the near future to help us with some of his insights and knowledge. So thank you very much, Lloyd. And to everyone else, to quote Jeff, bye-bye for now.
Bye, everyone.